Let me set up. Boom, shakalaka boom. Let's see, anyone else coming in? And got folks here from Katy. We got folks here from Houston. I think we have a couple of folks here from Florida. And good evening, everyone. And thank you for being here. We're going to jump right into this evening's content. But before I do, I want to quickly introduce a couple of key people. First of all, Nicholas Hughley. He is a real estate agent that I know, that I trust, um, and he is with EXP Realty, and I can just tell you, it's just a fantastic, fantastic individual and a highly experienced real estate agent. I also have Mr. Richard Alvarado, who I've known many, many years, is on my team. He is a licensed mortgage loan originator and fluent in Spanish. And I was hoping Natalie is here. And if Natalie, if you're here, drop me a message because I wanted her here because she works for the title company. And this is a very, very specialized product. But with all that said, let's get started. And we're going to keep this simple and maybe even have a little fun along the way. But let me start with one question. What if homeownership wasn't determined by your past, but how prepared you are today? Because right now there are a lot of responsible people doing everything right and still getting left behind. And DreamBuilder was created to change that, not a housing program, but it's a system designed to take renters and give them a clear, structured path to home ownership and long-term housing security. Let me ask you a question. How many of you have seen your rent go up in the last few years? Drop me a yes in the chat, please. Yeah, yeah. Let me ask, and seems to be the consensus, everyone. Yeah, thank you. Now let me ask you another question. Did your income keep pace with that? Way up. Yeah. Did your income keep pace? For the answer for most families is the answer to that is no. And this is truly that gap between the rise in the cost of renting and the income not rising to keep up is really, really where housing insecurity begins. And since 2020, rents have risen 24% nationally, 30% in Texas. But the reality of it is incomes have not kept pace. And here's the truth that nobody says out loud. The market doesn't reward rent loyalty. It rewards ownership. And real story that really changed my view of this, as somebody that's been doing this a long, long time. 2 years ago, I had a woman call me. She'd been renting the same house for 10 years, and her rent during COVID had gone from 900 to 1400. And when COVID was over, she had received a vacate notice to either vacate or she could buy the home. And she called me to help her buy the home. And I ran the numbers, very objective in my analysis, very accurate. And the payment was 1900 and it was just too much for her. And reflecting on that moment, right? We went back and we looked at what the home was worth 10 years before she bought it. And it was a third of the price that he was selling it to her for today. And objectively measured, she had paid $140,000 in rent over that 10-year time frame. And now the seller was wanting her to pay another $140,000 premium to buy it because the home was valued at $70,000 when she rented it. So at some point, I believe that every family has to ask themselves a real serious question. What do we do to move from renting to owning before it's too late? Because for this person, it was too late. And I could feel the anxiety in my conversation with her. And for those that haven't met, my name is Mack Blankenship, aka MortgageMack. I'm a managing partner with Rate. I'm a husband, grandfather, seven-time Ironman, and I have had the privilege of guiding visually impaired athletes in the Boston Marathon and National Paralympics. And you know what I believe? I believe preparation creates opportunity. And I've spent 30 years helping people, helping families navigate homeownership. And I can tell you, post-COVID, I see more housing insecurity than I've ever seen in my entire career. So the real question becomes, hey, what do we do about it? And that's exactly what I'm going to talk about this evening. And We're going to discuss why responsible people still get told no, why the system doesn't always reflect real life, and how DreamBuilder creates a path to yes. And we are going to stop at the very end of this evening's presentation, and we're going to do a Q&A. We're going to have Nick available. We're going to have Richard available, and myself, and maybe even the title company. So let me say this. Homeownership should not require a flawless pass because life doesn't happen in straight lines. And I don't know about you, mine sometimes been a merry-go-round. And income changes, setbacks happen, and people need to rebuild. And today, income just doesn't fit the traditional 40-hour work week of our fathers and grandfathers and grandmothers. And when a system is designed to only approve perfect files, it leaves a lot of families out. And DreamBuilder was built differently. We work with diverse incomes. We created a structured path for people who've experienced setbacks, and we support ITIN and DACA borrowers. But let me be equally clear, though, is that stability is still going to matter. On-time rental payments will matter. On-time utility payments will matter. Credit matters. And having money saved and set aside is going to matter. And this isn't about bending rules. It's about understanding real people and helping them with a path forward to housing security. Let me ask you something else. Have you ever felt financially responsible, but the system treated you like you weren't? Yeah. Yeah. Drop me a chat if you've ever felt that. Yes. Drop me a chat. Drop me a yes in the chat. I mean, you pay rent on time, we pay bills on time, we show up consistently, we do our jobs, but because our income maybe isn't traditional or credit isn't perfect, we hear no or not yet. And that always doesn't mean that a person's life is not stable. Sometimes it simply means the system doesn't recognize how real life works and how real life happens. And again, that's why DreamBuilder was built for. If you're self-employed, drop self-employed in the chat. If you're DACA or ITIN, drop DACA or ITIN in the chat. And how about if you've ever had to rebuild? Drop rebuild in the chat because you're not alone. And here's the difference. We don't just look at where you're at today. We're going to look at where you're going. All right, let me break this down and make it simple. First, the down payment. Traditionally, the down payment before DreamBuilder was 20% down. And in many cases, we're working with down payments as little as 3.5% down. Second, credit does not have to be perfect. It is going to matter, but it doesn't have to be perfect. And in many instances, we're starting at 580. Third, income does not have to be traditional. We work with self-employed borrowers, 1099, multiple streams of income. And I actually have a real example of a client, a new dad working 2 jobs, saved money for 2 years, but had a short employment gap of 2 months. And because of that gap, FHA would not allow me to count both jobs, and therefore we no longer qualify. He's looking at 17 months without DreamBuilder. And fourth, credit history. Credit history is going to matter, but we do look at real world payment behavior, rent history, and utilities. And finally, U.S. citizens eligible, permanent resident aliens, and many non-permanent resident aliens, including ITIN and DACA borrowers. So what this really means is there clearly are more paths to yes than most people realize. All right, let's talk about Samuel and Paola and another real world example. Hardworking, self-employed, doing everything right. On paper, however, just not perfect. The credit scores of 585. The debt to income ratio stretched above 50. Here's what happened. They were paying $3,000 a month in rent. And over 4 years, that rent had increased by 46% to $4,390 a month. I don't know about you, but I would be moving. And through it all, they kept making their payments. But when they got ready to buy the home, they were still told no. Now imagine the opposite for a moment. If that were you, No lease renewals, no surprise increases, no uncertainty about how much next year's rent is going to go up, stability, predictability, and a home that belongs to you. And that's what DreamBuilder made possible for Samuel and Paola. Let's talk about how it works. It isn't a theory. It is truly a structured path for you and your family. And on the left is the traditional renting. You pay your landlord, you live there, but you don't build any ownership, you don't build any equity, and rent resets every 12 months. In the middle is DreamBuilder. And this is where the shift begins to happen. It's a structured, defined terms and forward movement to ownership. And on the right, full ownership, equity, control, stability, no more resets, and no more guessing. So let me walk you through the process. And step one starts with pre-approval. And this is just so, so important. Full clarity, no guesswork for you, for anyone involved. We will review your credit, your income, documentation, so we all know where you stand. And step two, purchase. The property is secure through an approved structure that creates your path forward. Step three is the structured agreement, as mentioned in step two. And from day one, your terms are defined, your path is clear, and you begin moving towards ownership. Step four, stability and preparation. You make consistent payments, your credit improves, your financial profile strengthens over time. You're no longer stuck in the rent cycle, and you're preparing for ownership. And finally, step five, transition to full ownership through refinancing with yours truly, or by assuming the existing finances. You move into full control of your home, and you've moved from renter to owner through a structured path. So where do we go from here? This is where we switch or shift from information to action. And everything we talked about tonight starts with one key critical step: pre-approval. Not pre-qualification, not let's see what happens, but a real approval with real clarity before you write a contract, before you fall in love with a home, before you negotiate with the seller, because clarity protects you, protects your time, your money, and your credibility. And so if you believe that you're ready, I left in the chat, there is a book appointment link for yours truly. I would ask Richard, if you have your book appointment link, please drop it in the chat. Or you can go to mortgagemack.com if you believe you're ready to apply and start the approval process. My team and I will send you a checklist, and from there we'll organize your documents, submit your file, get a real approval, issue an approval letter, and give you a license to go start looking at homes and negotiating to become a homeowner. And this truly, truly is a path to creating housing security for families throughout the city, throughout the county, throughout the state of Texas. And let's talk about the home. And that's the one key element that we haven't discussed here as of yet, but the property must be in good condition, must not, it doesn't have to be perfect, but it must be safe, stable, and livable. And that means it must meet FHA's basic guidelines: no major hazard, no serious structural issues. And you will be required to do an inspection, and we can provide a referral to you for a preferred inspector. And there's also something called an appraisal, which is different from the inspection. If there's anything specific in the appraisal that comes to the underwriter's attention, it will have to be addressed. And so, in essence, no shortcuts, right? And that's a good thing because it protects you, protects your investment, and protects your family. And finally, the timeline. And this is where this is sort of outside of the normal timeline connected to the closing of a mortgage or residential mortgage transaction. And so once we reach the clear to close status, and that's after appraisal, after title, after approvals, we're typically looking at 4 to 7 days for closing. It's a structured process. e-signatures, closing documents, funding, all coordinated by myself and the title company team. So it's not a same day process. And that's why we believe and know that the pre approval is so eminently critical so that we can transparently connect with the other party, which is the seller and the listing agent, and communicate to them that we are prepared and ready to execute. However, because of the structure of our transaction, it will take slightly longer for the funding to actually take place. But I can tell you this for a fact that I've been doing this a long, long time. And we are transitioning into a buyer's market that we haven't seen for a long, long time. And I believe that this is an opportunity for many families and many individuals to take advantage of this opportunity with the understanding that, hey, prices are improving, sellers are making concessions, and so if you're ready to get started, go to mortgagemack.com, apply there. And we do have a world-class mobile application. If you want to click on the QR code there and download our mobile application, we spared no expense. It's just a fantastic, fantastic application with tons and tons of resources. And so, everything that we discussed comes down to pre-approval, and you just got to do it before you fall in love with a home. And if you go apply, my team and I will connect with you, spend some quality time with you, begin to help you make a plan and be prepared to move forward with certainty. When that said, I'm going to open it up to Q&A. Please drop your questions in the chat. That's all I had. How was that?
Thanks for that, Mac. Appreciate that. A lot of good, solid information there. I really appreciate you providing that. And
Yeah.
I'll reiterate what you said, the last piece there, that as the realtor kind of involved with this, it does no good for me to run around and show folks houses without a solid pre-approval from somebody like you. So definitely appreciate that.
With the timeline connected to the closing, it's going to be a necessity for us um, to go into the transaction fully approved, right?
Absolutely.
Yeah, Florence. I'm dropping my link to my website in the chat. I'm also going to drop my link for a one-on-one appointment into the chat as well. Yes, Florence, go to Mortgage Mack. I dropped a link right there in the chat for you. Mortgage Mack. All right, so let's see what is this too good to be true? I don't know. You tell us, Richard. You have experience. You have a lot of experience with this program. What are your thoughts on this?
Yeah, I mean, just as long as, the clients understand how the program works, that they're willing to do their part to get into a home, it can, process takes just a little bit longer than traditional FHA programs, but
No
in the
doubt.
end,
Yep.
it, they're going to have their home and stop paying rent, start building equity so they can get their life on and
Yeah.
stop paying somebody else's mortgage.
You, I can't say enough how critical it is to, as soon as possible, create some housing security. And I believe that, based upon the numbers that I look at every single week, we are transitioning to a buyer's market. And, their inventory, at least in Houston, we have more inventory now than we had pre-COVID. And I went to an event last week and to a builder event, and they were talking about how the traffic had slowed a great deal in their communities. And clearly, that is an opportunity. If you're a buyer and you're prepared, it's an opportunity for you to go in and sort of set your own terms to some degree.
Correct. And
Yeah.
everybody, don't get discouraged if you don't if you can't qualify for the home that you want. At least, try to get into a home. It may not be your ideal first home that you want, but at least start building equity in that home that you can get into. That way, you farther on down the line, you can sell that home and get into the home that you want to. But the idea is to stop paying rent, stop
Yeah.
paying somebody else's mortgage.
Yeah, I've never seen so much housing insecurity, and I can tell you that conversation that I mentioned earlier. I mean, it was a real conversation that really had an impression upon me about how we had shifted post-COVID in the housing market to, because generally you could always move out a little further out, and you could always find something affordable. She was already in Alvin.
Mm.
And I live in Pearland, right? Nothing against Alvin, right? But it's traditionally the further out you went, the more affordability you could find. But at that moment, I mean, there was just nothing in the Houston metropolitan area that would afford her even the amount of rent that she was paying, which was 1,400. It was really just a moment where I could just feel the anxiety coming through the phone. And and actually, me, I had another person that had a similar story right around the same time. I tried to introduce them and suggested they buy a house together. You know, I
Yeah.
think, there's a lot of multi-generational going on today. And I think that, it's that important. It truly is that important. And I know that I've met nurses and I've met other professionals and teachers that are in the same school, in the same hospitals, single parents getting together, buying a home together. And we have a legal framework to where instead of, if you don't want to go get a husband or a wife, we can create a legal framework for, two people buying a home together that creates a legal relationship because you need to have a legal relationship if you were to do that with somebody you didn't know. But actually, I've seen it happen on more than one occasion due to no other reason than affordability, teachers and moms working in the same place, children, and buying a home in a neighborhood together so that they can build some equity, have their children go to the schools that they want, and have and be able to afford a home. Let's see, any more questions? Okay, what kind of buyer does this actually work for? I would suggest that it works for any buyer that, that that doesn't fit the traditional mortgage transaction, right? And or maybe you've been told no, and you know that you pay your bills on time, you pay your rent on time, you pay your utilities on time, and you have a little money set aside. I'll give it. I have just a fantastic couple that I know right now that I've worked with in the past, and we're fixing to buy their first home, and without this opportunity, we wouldn't have enough money because the down payment outside of DreamBuilder is 20% down versus 3.5. And, that's a big, big difference.
Definitely be the difference between being able to purchase and not being able to purchase. So
Okay, Miss Florence. Well, thank you for being here. Refer all your friends at Bible study to us. Any questions? Let's see if I have one more here. Well, I think it's pretty clear why it's different from renting. And here's one. What if I'm not ready yet? Huh, good question. What I would suggest if you're not, then, just, keep our information and stay in touch. Send us your, email us. Email me, mac.blankenship@rate.com, or email Nick. Nick, put your email address in there and email Richard, and, we'll send you our contact information. And look, you can always find me on Google at #MortgageMack. We have a really large digital footprint. And I can always put you in touch with folks that can, like Nick and Richard, to help you lay the groundwork to become an owner, create housing security for you and your family. And, I can say that having grown up and with a single mom and having gone from rental place to rental place, having your own place just makes all the difference in the world as a child and an adult. And with
got a
that
good
said,
question.
what's
Got a
that?
good question in here, Mac. Rosie says, "How do we know if we qualify?"
Yeah, the best way to know is to apply and because look, the the measurements, the means by which we're measuring this are not sort of a square peg, right? We're going to be looking at everything in its entirety. So I would suggest that don't prejudge yourself. Just execute and go through the process. Apply at mortgagemack.com. We'll send you a complete checklist of everything you need to get pre-approved. And not asking, I can promise you, is the same as a no. So I would just go in, do the work, let my team process the paperwork, send it to the underwriter, and 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 make them say no, make them say yes. How's that?
Thanks. Here's another.
Hey, Mac, Natalie's on the call. She's
Okay.
using her alias as Kenny.
Using her
If you
alias
want
as
to
what?
unmute her,
What's her alias?
Kenny.
Kenny. Oh,
And
okay.
also, there's a couple of other questions in here. I just want to make sure we get
Yeah,
to.
one moment. No rush. No rush. Let me see if I can make Kenny? Kenny. Hey, Kenny. Oh, you're not Kenny. You're Natalie. Okay, so yes, Samsung refinancing, absolutely. I'm refinancing one right now. Similar situation, structured transaction. Borrower didn't qualify for traditional financing. Entity purchased the home, did in essence, a lease to own option, owner finance sort of option, and we took that lease to own. We recorded it of record, made him the owner, and we're going to refinance it for him. So yeah, absolutely, Samsung. Thank you. Let's see, what's the current monthly mortgage around the Richmond area for a four-bedroom? That's a real tough, it's tough to answer that question because there's so many variables connected to mortgage payment, Rosie. So I would encourage you to go to mortgagemack.com, and I'm going to drop a link in here to my mortgage calculators. And then I can also suggest that the best way to know for sure is to, get with somebody like myself, get with somebody like Nick, get with somebody like Richard, and let us, find a home that you like and let us do the numbers, right? Because each home is going to be slightly different as it relates to taxes, as it relates to insurance, but not a major amount, but a slight amount. And, we have the resources and the tools to verify that and to formulate an accurate payment analysis for you. And not sure that that answers the question, but again, there's so many variables connected to formulating a monthly payment. You have the interest rate, the amortization, the sales price, the amount of down payment, and so don't know that I could give a clear, objective answer to that without all of those variables. So we answered, does this work for refinance? Thank you so much. If we don't qualify initially, do you tell me? Yes, absolutely. We'll make a plan. I believe in plans. And I can tell you a moment, I have so many moments in this industry that just really just sort of made me pause, right? And this one of those moments was in March of 2020. And I was at a closing with a couple and I knew their mother, right? And their mother had referred them to me, but it didn't make the connection. And they said, Mac, do you remember us? And sort of, you know how that is. You sort of get embarrassed. I'm like, yeah, well, I know your mom. They're like, no, we talked to you 5 years ago and we weren't married yet and our credit was bad. And I went, oh yeah, I remember you now. and and it was. And but since then, 5 years later, they'd gotten married, had their kids, they were moving from Oklahoma to Houston, Texas, and there they were buying their first house. Now they're on my Facebook page. Now they got three kids and a big, big backyard. That's a good story. I love that story. Let's see. What do we have here? Is there any restrictions to prevent owners using the program from selling or leasing it out later? Is there any restrictions to prevent owners? You know, yeah, that's not, Han, I don't see that as being an issue at all. And I do have my representative here this evening, and I can say with certainty that the owner cannot turn around and prevent program from selling or leasing. I would think there may be some restrictions on leasing, Han. So I would need to get clarification of that. And I will make a note of that. And if you'll drop me your email address, I will make sure that we get a very, very clear answer to that so that we can create some clarity connected to that question. They cannot. Okay. So I have somebody here that is connected at a high level with this program, and I've asked him to be here to observe what we're doing. And he stated they cannot sublease Ham. And I would take that as gospel. There you are. Hey, thank you, Han. Let me see. One second. One second. Okay, can you everybody still see my screen?
Yep, you still see
Okay,
it.
great. Thank you. All right. Do you still see the presentation or my picture on there? Yeah.
Yes.
Okay, great, great. All right. Do I apply first or find the house? Jessica, we need to apply first for sure. For sure. Get the pre-approval, take out the guesswork. And this is a program where we're not qualifying you. We're going to take a look at the whole picture. And if you have a credit score that meets a 580 and you've been consistent making your rental payments and your utility payments and you've been working consistently and saving a little money, not asking is the same as a no. Go to mortgagemack.com, apply, and we'll send you a checklist and we'll help you and your family get pre-approved and go house hunting. We can do below 580, yes. And I think that's a really good point to make, is that they will go that this entity will go below 580 with on a case by case basis. So that is so if if your credit score is below 580, go apply. Let's put together the documents and let's go ask. Okay. Well, hey, you know what? I would ask if you have any suggestions on maybe what we could have done better. I would be super, super grateful for that. And hey, I've been in the mortgage business 33 years. Can't offend me. If would love to get your feedback, you can email me. And I'd love it if you'd go subscribe to my YouTube channel. And there's my email address. I would indeed enjoy your feedback. And so if there's no more questions, we're going to give it about 30 more minutes and we're going to wrap it up.
Mack, you misspelled your last name on your email.
That's okay. Huh. Did I? Did I? I did, didn't I? Yep, I sure did. Huh.
There you go.
There we go. Appreciate that, Richard. Where I grew up, we called that keeping you out of the ditch. When I grew up, we didn't have sidewalks. And, we were all really, really bad drivers. YouTube. Yeah. So I'm going to drop my YouTube channel in here. Would be grateful if you'd go subscribe to my YouTube channel. And I'm going to post this on YouTube here this week sometime. And I'm also going to post a replay on the, and that you can watch later if you want. So, anyway, well, hey, thank you everyone for being here. And I'm super grateful and enjoy helping families become homeowners. I believe that my responsibility as a federally licensed mortgage loan originator is to meet the needs of the community and help find a path for families to become homeowners. And I believe that. And with that said, I would thank you again for being here and look forward to visiting with all of you very, very soon. Thank you very much and have a great evening.
Thanks, Mac.
Take care.